Good morning. This is Peggy van der Plas, and today we're going to talk again about money, and pension funds. You're going to wonder, why is she always talking about pension funds? Well, it's very easy. It's money we have as countries and that as taxpayers we actually found, and that we should use for our own benefit. Seems obvious, but doesn't it seem to be the case? So today I want to chat about something a bit different. So in the past, I spoke about why do pension funds, especially Canadian pension funds, don't allocate more direct investments to Canada. Today, I want to talk about something a bit different, same vein, is why do Canadian and actually UK pension funds don't allocate money to their local money managers? Yes, that is funds who manage money for pension funds. So it's indirect investment. So think about private equity fund, debt funds, all of that. Some is managed in-house and some is managed outside. And very often, outside money managers are not national money managers. They belong to other countries, very often the US, actually, which makes sense. It's a very large country. But when you think about it, well, if we were to just increase by 10% what we allocate in terms of capital to these money managers, that would do some good to our economy, I think. So you might have seen that previous video a couple of weeks ago. I spoke about this big uncomfortable question of why don't Canada's pension funds have a mandate to support provincial and national economic growth? And why do they invest billions in direct investments abroad while overlooking opportunities in their own companies and infrastructure projects? But again, direct investments are only part of the stories. So every year, Canadian pension funds deploys billions in public equity, private equity, debt markets. But again, instead of channeling these assets through Canadian money managers, a substantial portion goes to foreign firms. And question is why? Why are we outsourcing capital management when we have some of the best? I mean, Canadian, we have a lot of very, very good money manager. We have some of the best money manager in the world right here at home. So again, it's time for Canada to rethink who manages our money. So what what I want to share is something I read a couple of weeks ago, last week maybe. It happened in the UK actually. So one of their pension funds, the People's Pension, which is one of UK's largest pension funds, just shifted 28 billion pounds, which means around 48 billion Canadian dollars from State Street, a US firm, to Amundi, a French firm, and Invesco, a US firm. And they did that for a better alignment with ESG principles. So I think that's great to have a move for ESG alignment, especially right now where everything that is a slash slightly progressive is being slashed. But nonetheless, it raises an important question. Why do pension funds consistently overlook their own country's top tiers investment professionals? I'm pretty sure that in the UK, you can find money managers that have a ESG mandate and that could have managed at least a chunk of this money, maybe not 100%, but 100% of that reshuffle went from the US to still the US and France. So, and it is not just the UK. Canada does the same. So, uh, and it's a Canadian paradox, but also a British paradox, actually. We have a talent, but they're not always the first choice. So I mentioned that in the past. Canadian pension funds, they control over 2.5 trillions in assets. Yes, trillions with a T. And yet a substantial portion of its assets is managed by foreign firms instead of homegrown investment powerhouses. Again, we have the talent. It's same thing than what I said with direct investments. We have the companies, we have the infrastructure projects. It's not that we don't have the opportunity to deploy more capital at home. It's the same thing with money manager. We have amazing money managers, but the default is to give abroad, mostly to the US. And so while our homegrown Canadian fund managers are flying overseas, pitching their expertise to international investors, our own institutions, they aren't always giving them a fair shot. And I work with a lot of pension funds actually, and I can tell you there is a very strong preference for everything that is not coming from Canada, and a very strong preference for everything that is coming from the US. And I think right now, well, it's the time to question that. It was already the time to question that before, and I questioned it many times. And don't think I had a big impact, let's be honest. But now I think it's really, really becoming time to, okay, let's put our shit together. Why are we even doing that? It's nice to have an imposter syndrome, but at some point you need to walk it through, like we're not kids here. So it doesn't make any sense, but also, like it costs us Canadians billions in potential job creations, tax revenues, economic growth. So it has an impact. It's not just to say, well, buy Canadian. It has a massive impact. So what is happening right now because we are not investing in our own people? Well, every dollar that we are sending to a foreign money manager is a dollar that is not supporting Canadian economic growth. Because when we don't prioritize our own investment talent, what's happening? First, we miss out on job creation. Obviously, the asset management industry is a massive employer, and growing it at home could mean thousands of high-paying finance tech jobs. Obviously, this money is being reinvested because these people, they buy a house, they go to restaurants, they have kids. So it is a huge, huge miss. We obviously shrink our tax base because Canadian money manager, well, guess what? They pay taxes here. Foreign firm, not so much. So, not only we don't have a job, we don't have the taxes, and we're not building an even stronger financial services industry because like a thriving domestic asset management sector, it's going to benefit the entire ecosystem and the broader economy. So it just doesn't make any sense to me because that would put Canadian even more as a global leader in financial services. And we're very well positioned as a country in terms of financial services. We have some of the biggest pension funds, largest banks, insurance companies. So we're really punching above our weight in terms of financial services. But guess what? We could punch even higher. And right now, you don't want to leave $1 on the table. So that is really a question we need to think ourselves. Why don't we allocate more directly and indirectly to the Canadian economy? So, and again, what I'm saying, it's Canada first doesn't mean Canada only, but it should mean Canada more. And this is not about shutting out global investment firms. That is not what I'm talking about. It is about making sure Canadian money managers get a fair shot at managing Canadian capital. Do you think US pension funds are privileging a Canadian money manager? I don't think so, and rightfully so. So why are we doing it? I mean, mind blowing to me. So we want to keep more of our capital management industry at home because it means, again, more high value jobs in Canada. It strengthens our financial sector. It ensures that Canadian money is working for Canada, not just fueling financial growth abroad. And I think right now with like the federal election that are in the horizon here in Canada, this is a topic that deserves the attention. I never hear about that. You hear stupidities all day long on micro things that will really don't matter to the economy of Canada, but that silence. You never hear, it's like crickets, never hear anything about it. While seems to me it is quite an easy change. You look at people's trust. They went from State Street to Amandia Invesco. So why can't we do the same and we allocate even just 10%? even just 10%. 10% of what we allocate to foreign direct and indirect investments to Canada. Just that, well, you already have your stimulus right now. So anyway, I think it's really time to have a conversation on this topic. It's not just about finance. It's about jobs. It's about economic growth. It's about Canada's financial future. Whether you're in finance or not, you should be excited about that topic. It's a bit like you have a um, huge saving accounts, and instead of using it to open doors for you, to make your money work for you, you just leave it in the lowest interest rate account, and you're not using it to maybe have access to, I don't know, funds you might be interested in, or maybe jobs you might be interested by investing in companies that will ultimately hire you as a consultant, board member, or employees. So we're doing that. We have massive power, and it's like, oh well, let's not look at it, let's not use it. And anyway, it's just mind blowing to me. So, and again, if we don't take action now, we risk becoming a country that produces world-class investment talent who will go work elsewhere, because guess what? There would not be enough assets to manage here. So I think it's important that we talk about it. Thank you very much for watching, listening. Please comment. I'm really curious to see what you're thinking about it. You can learn more about me on my website, peggyvandeplage.com, as always. Thank you so much. And really looking forward to continuing discussing this topic, because it is a very important topic. And it's also quite a symptom of all we think in the country. That's, I think, an important point as well. Thank you so much and have a great day. Take care.